Hi and welcome to another market update video. And what a day it's been, a couple of days actually. We've had crazy volatility in the markets, going down to almost about $60,000 up, from the high of 73. And I just want to take you through what I'm seeing at the moment and what can happen probably in Q2. Seeing as we've had a bullish Q1. So Bitcoin's finished its wave 3 here. It could be the 3 of the 3, and then we've still got the 5 of the 3 that's left. Probably that's what I'm leaning to more, even though I did say maybe this is the major 4, but because of the time and the way it's unfolding, probably I'm more leaning to we got another 5 of the 3 coming up. But regardless of whether it's the wave 4 major or wave 4 minor, we're going to see 5 waves up to about 100k or 90k area. That's what I'm forecasting next. I don't like to get bogged down in the counts so much because I use Elliot wave as the guide, but obviously I use other tools to determine price weakness and strength, as I'll show you why I thought yesterday was a great buying opportunity. So in this correction here, now there's many ways you can count it. You can count it as a 1, 2, 3 complex correction, another 1, 2, 3, 1, 2, 3, and then this can be a very complex correction that's still going. What I simply do, and I don't really get bogged down into counts like I said before. I like to measure where this wave can potentially finish. Okay, so we'll go and measure this quickly from the start of wave 1 into the top, and as you can see, we've come close, not quite at the 382, which would have been the ideal correction in my opinion, and that would have been great. We took the liquidity of the lows here, so if I just zoom in a bit so you can see, so we took the liquidity of most of these lows here. We just haven't taken obviously the final liquidity of these lows, which could still happen. I'm not saying it will, but it could still happen, right? So I would have liked it to come all the way to the 382, but at the end of the day, the minimum correction was, as soon as we got into this box here, that was the minimum correction of this whole wave 3. So the requirements were met. Okay, so now going forward, where do I think, or what do I think is happening? And so what this can be here, this sharp move that we're getting up, it can be a couple of things, right? It can be the wave A. Now we're coming up into the B, okay, and then we'll get a final C leg down. Maybe we'll just break the lows here, or we could overshoot, okay, because if you notice wave 2, if I go back here, and you'll see wave 2 here, let me just find it. Yeah, so wave 2 here, this big wave here, was an expanded flat. Now what that means is that there was the high of wave 5 around here. Wave B broke, which is now what's happening, I think, is the wave B. Wave B broke the high, and then the C wave cleared all the lows here. Now, because of the alternation rule in Elliot wave, what I think can happen, and it's a possibility, is that this wave does break the high, but it doesn't break the low here. So what you can ultimately see is something like, let me get this. So, we've got the A coming down, B, and maybe C, and then we continue up. Or another option, the B wave comes in at the Fibonacci 618, which I've put up, and then you get the normal C that breaks the A. So these are still some of the possibilities left for this wave to finish its correction. Or if this was a complex correction and this is the final wave, this was A, B, C, basically it's done, then you can still get in, and you don't have to rush in right now. And what I mean by that is, so let's look at this now in more detail, right? Let's look at this going up. So if we count what's happening so far, so we have the 1, 2, let's say this is the 3. The 3 will finish, you'll have the 4 coming down, 5 going up, and then you'll have an A, B, C for wave 2. Okay, so something like something like 1, 2, 3. I don't know. Let's just. I haven't measured it because of I'm not going to put the Fibonacci stuff on now. 4, 5, and then what you would get, A, B, C. Something like that. So we can have a move up and then a pull back down. There's a couple of options there. So regardless of what happens, whether this is the A and we get a B and we get a C, or this is the one, wave 1 and we get the wave 2, and then it goes into the third. You don't have to rush in. That's what I'm trying to say right now. You don't need to really go in and think, oh, I've missed the bottom, I've missed everything, and what's gonna happen. At the end of the day, there's still time. You just let this play out, and if we let me put on the VWAP as well, see what's happening. So we've broken the first major downtrend. So you can see the VWAP here from the downtrend is getting rejected at each of these sections, even the last one, and now just today we're breaking the VWAP, and that's the first sign of strength. Obviously the next major resistance is here around $70,000, $70,000, and we'll take it from there. So how you'll know if this is a B wave in regards to whether it's going to be a B and then a C, or so 1, 2, 3, 4, 5 and a wave 2 coming down. You just have to count the wave structures here, and if we get 5 moves up and then 3 moves down, that's the 1, 2. If we only get 3 and then 3, that's the B and C. So it's all about the wave structures and how many waves you can see. Obviously what we want to see ideally is a 5 up and a 3 down, rather than a 3 up and a 3 down. But regardless of all that sort of stuff, right, it doesn't make a difference, because we are, in my opinion, going to go to the wave 5, and some targets I have for wave 5, that 618 here around 91,000. So that would be my first target for this wave 5, and obviously you got the 1-to-1 at 116. But because this third wave was extended, okay, this third wave went to the 1.618, if you remember in the last update, I think 91,000 is probably a good area, because I don't think the wave 5 will be extended. I think the wave 5 will between the 85 to the $90,000 range will be a target after this correction has ended. So all in all, I just want to do a quick update. So I'm not too fussed about this correction, whether we get another C wave down, or if it's the 1-2 and we go, because I think now in March, the remainder of March, it will be maybe it will be a bit choppy. Maybe it'll come up and down, and then I think in Q2 in April, I think that's when we get the from April, May, I think that's when we get the real run to $90,000 plus. And I just want to show you a few things, a few techniques that I use in terms of knowing where how to get into a trade, or how to get into the market at certain times. And I just want to take you back to a couple of examples, and I'll try to show you here how it's done. So if you look here, so let's look at December, and why this was a great buying opportunity. Okay, and this is what I want you to remember for what's going to happen in April, because that's another quarter. So these lines represent a quarter. So for example, this was the previous quarter. So if we look at December, October, November, December, so this line is the volume area, or the volume area high of December. So the value area high. So we're basically where it's a premium, where price after October here, so this was the new quarter So during October, price rallied all the way up, and once it got to this stage here, this is when it was a premium. It was no longer attractive to buy. It was too expensive, and you can see in December price was, just chopping around at the end of the end of that month. Okay, so people or traders, because that quarter they bought it up so much. Once we got over this premium, it wasn't attractive enough, and we had to wait for the next quarter to open, which was January. So January opened, okay. And as January opened, and this is the key thing to watch. So Jan opened here. So that's the key level, the value area high of the previous quarter. It dipped below it, okay, and it got bought straight back up. And that was a great signal to tell us, or to tell me anyway, or one of the signals is that the next quarter is going to form a new range high, okay, because this previous range that we've had from all the way from October up until December, that range now has been defended, and now the buyers want to look for a new a value range, you can say, and this is the value range for this quarter, and this is another reason why I thought as soon as price dips below, we're going to get bought back up. And so this is still going on, so there's another 10 days or so of this value area to form. So it could go up a bit by the end time this quarter finishes. So something to note. So again, price rallied. The point of control is probably here somewhere. That's the value area. That becomes the value area low now, where price will get bought up. That's a discount basically. So this area is now a discount, and now this area is a premium. It's too expensive to buy, so we got the pull back into it. Now what's interesting is, as soon as we get back into the below the value area high of this quarter, it got bought straight back up. So it suggests that there's going to be a new range to form coming into the next quarter. So this quarter you still might see up and down movements, you might come back down, but so far it's being defended, and that bodes well for the next quarter. Now when the next quarter opens, let's just say the value area is at this range, it's at 63,300. What I would be looking for initially, and what I hope would be is to happen, wherever the value area high finishes this quarter, say it finished here, I want price again to come below it, and I want buyers to bid and push it back up. Again, that would say that this value, all this value here, okay, is now seen as a discount, and then we're going to form a new value area high, hopefully to about $100,000, which it'll be too expensive to buy, and we may get a bearish quarter, or bearish sort of from January to from June, July, August. It might be a bearish quarter where it's too expensive and a new value has to develop basically. So this is what I'll be looking out for. So in April, when April starts here, hopefully price is close by to the value area high of obviously this quarter, maybe dips below it or gets tested on it. As soon as you see it getting bought back up, and then you're back basically into a new value area range, which will be for the new quarter. Now what's the opposite of that? And this can happen as well, right? I don't think it will, but this can happen. If price starts going below it, okay, and it can't get above, that means this area is too expensive for buyers now, and they will want to go to the value area low of 40,000. Now obviously you don't start getting panicked or anything like that, but this is a concept that actually works very well. I think the way I see it, the way the reactions are happening, the new value will be higher, but obviously that's an opposite scenario. That's maybe something to think about for July, August, September, the next quarter. So this will be April, May, June, July, August, September might be the next quarter. So something to think about then. It might be a bearish quarter then. You might get a couple of months downtrend from 100,000 down to 70,000 down to you might get 20-30% correction. So that's something to think about then. But look at this technique here. It works really well, and you can simplify. You can use this technique on any kind of time frame you want by looking at the value area highs and the lows of the month, of the week, of the day, if you're a day trader and things like this. Me personally, I like the long-term signals because it works out a lot better, and that was a perfect one that I saw back in January. And if you read my tweets back in January, I was really bullish in terms of price going higher, and again, I think this quarter as well, we maintain over the value area high of Q1, which is 63,300 at the moment. Depending on when this finishes, again, it might go higher. It might get up to 65,000. I'm looking for a dip below, and then a move back up. So that would be a great signal. And there's other ways to look at this as well. And once we get into April, we'll look where we are in the charts. Just quickly look at total 2, because that's total 3, and this is something that I want to show you as well. This is the value area high of this quarter again, and like I said, it's no surprise we're in here, defended, and we're going back up. And I think again the next quarter, this range, what it's saying to me is this whole range here is being defended. So alts should have a great range for the next quarter. That's what it's telling me here again. So when this quarter ends, again, the value area high, you might come dip into it depending where it finishes, and then we'll go off to hopefully some amazing gains. So look out for that as well. And let's look at the fibs and the fan again into the 618 golden area, value area high of the range of this quarter of Q2, Q1, and then breaking this will be in Q2 most likely. So I wouldn't rush into anything right now. What's happening now, if I show you again with alts on a high time perspective, we're out of the value area high, so it's not longer really a big discount. You'll get some movement here and there, but you might come back down, you might chop about. That was the area to buy. We're not too far off it. Hopefully we get another retest if you're not in some alts, and then we'll every alt is kind of different. Some alts are obviously they've probably tested it and they're way above, some are probably still below, so you got to look at each alt individually as well. But as a market cap, I think we're going a lot higher in Q2, so that's something to watch as well. The value area is very important. Obviously the worst case scenario, just like I said for Bitcoin, would be in April. When it comes to April, you dip below it and you can't get back above it, then game over. But again, I don't think that's happening. But it's always good to have both scenarios in your head, just so you know what traders and what buyers are doing. Do they see value in price here, or do they want to go lower? At the moment, in this quarter, like we said, from January, traders or buyers have seen value in alts, and now it's out of kind of value, so it's a bit expensive. So we have to wait for a new quarter, and it's not surprising. It comes to the end of the quarter for a new value range to open. This is because I like to use quarters as settings because it really gives a good long-term I would say a long-term outlook for the asset class that you're looking at. I know people use this sort of technique on the monthly, the daily, the weekly, and certain things like this, but I prefer the long-term view, and you can really understand where you are. So again, we don't want to lose this area in Q2 in April. Depending where this finishes, it could, the value area could go up a bit depending where this finishes, and there's ways, you calculate that by volume software, and then even on TradingView, you can use the I think it's what's it called here, the session volume profile, fixed range volume profile, so you can do your range from if you want to look at quarters, so you just put that and you can put the range to of a quarter and the previous quarter, and then work your way like that. So and these other tools, these other software programs that can do it as well. For example, I think Excel charts, Trading Light, things like this, they use a lot of volume analysis, but I think you got to pay for them. So TradingViews, depending which one you have, you can either use it free or you can obviously subscribe to it as well. But anyway, so this is just a really quick update for what I'm seeing at the moment, with Bitcoin and with the market in general. So again, watch for this area here. It still could be a correction. We could still go up, down, and then continue up. And the value area is very important, very, very important. This was a key area yesterday when we dipped below it and the buyer stepped in. You knew this area is all being defended. The area from 41,000 up to 63,000 is being defended. So again, I don't mind if we come back down, get defended again, and then we go into all-time highs in the next quarter. So that's my little take on the market at the moment. Don't rush into anything. See how this pans out. We could get another correction. The worst thing is to FOMO in today. That would be very, very silly. I think yesterday, and I was tweeting this on purpose in the night when I was watching this, and I knew this was the area to get bought back up. And you have other confluences, like for example, you had the area of the wave 4 correction coming in. We didn't quite get the 0.382. Will we get it again? Who knows? Maybe we come back in and actually test it. Maybe we'll go do a running flat and we'll go above this, come down, and then go up. Or maybe this is the wave 1 and come into the wave 2 and then go up. So we will get a pullback. We just need to, when the pullback comes, just identify what kind of pullback it is. Is it a wave C or is it a wave 2? I don't want to go into detail now on how to spot that, because I don't want this video to be too long. But I hope that update was okay, and I hope you understood where my mind is. I'm at the moment very bullish for higher prices, regardless of a correction here or there, and I do think Q2 will be a very good one for Bitcoin and for the altcoins. I think the altcoins will start outperforming Bitcoin going into Q2. And I know people are always saying, when's alt season? Well, if you bought alts here, then you should see a really nice alt season. But if you wait until Q2 when we're at something like 85,000, then you're not going to see an alt season because it's past you by. So these are the things you have to really look out for as well. So again, hope you enjoyed this update, and I'll probably do another video and some more altcoins charts, maybe towards the end in the next week or so, and see how this develops. So take care, and see you next time.